Good morning, traders. This is Jim Comiskey, Senior Market Strategist at MF Global, coming to you live on Wednesday the 5th, about 9 o'clock. Give you some color on the metals complex, amongst other things. First of all, the opinions I'm about to express are mine and mine alone and are not necessarily shared by MF Global. Okay? Gold. 1617.50 last, that's up $1.50, 150. Silver down 41 cents to 29.42. Copper down 6.75 to 303.5. The greenback down 42, 79.67, and the euro up 68 to 133.05. Okay, first of all, yesterday was one of the greatest moves, one of the biggest moves, one of the most vicious moves, one of the most sudden moves that I've ever seen in the stock market. I've been through the 87 crash, the 91 crash, the Mexican devaluation, the Russian debt default, Y2K, 9/11. I've been through an awful lot of incredible market moves, okay, in the indexes, and yes, the indexes are tied to the hip with all the other commodities, if you will, be it metals, currencies, grains, etc. But that move down to 1068 yesterday, and then the surge to 1120 in the S&P in about 45 minutes was stunning. It's almost like, you know, and those of you that follow me, now I'm not really a conspiracy theorist. I tend to shoot down conspiracy theories. Having said that, something didn't smell right. I did a volume study on the initial break, okay, from 1100 down to 1068. Okay, now it really picked up late afternoon, about 1:30, 2 o'clock Central. Okay, huge surge in volume on the E-mini S&P on the downside, and then on the upside, equivalent of volume. You know what that tells me? High frequency traders kicked in, some big logarithm shooting size, like upwards of 150,000 contracts on the downside and on the upside. Just whipsawed everything. Gold went from 1628 to like 1595 in the space of about 20 minutes, and then rallied. A lot of these things are almost untradeable. In fact, you know, and I get paid when people trade. All right, so but what I'm doing for my people, okay, is basically we're putting together options trades, okay, be it bull vertical call spreads, bear vertical put spreads, things of that nature, selling strangles, buying straddles, etc. Okay, but yesterday the news was that you know, that sparked a rally supposedly. Okay, it was that the IMF vowed to spend yet more taxpayer money. Okay. To shore up the ECB, who's going to shore up the EFSF, who's going to shore up, well, let's start with Portugal, Spain, Italy, Greece, etc., etc. So one thing that should outrage anybody that's listening to me right now, okay, that is a U.S. taxpayer, the IMF, by quota, okay, you can just Google how the IMF is funded, okay, but the U.S. is currently contributing about 20% to the IMF. Okay, so say they throw another $100 billion, $200 billion at Greece, or at the IMF, okay? The U.S., us, me, you, are on the hook for 20% of that. Real money, okay? Just wanted to point that out. Okay, there was some good news, bad news this morning. Okay, on the payroll front. All right, ADP, a number that is kind of gaining credibility, by the way. Private payrolls rose by 91,000, according to payrolls processor ADP, above expectations for a gain of 75,000. Okay, now I haven't said that. Here's the bad news. Okay, Challenger, Gray, and Christmas. Okay, it's a consulting firm based in Chicago here. They reported that the number of planned layoffs at U.S. firms in September jumped to its highest level in more than 2 years due to heavy cutbacks by the U.S. military, that's surprising, and Bank of America, our favorite bank of the day. Okay, the employers announced 115,730 planned jobs cuts last month, more than double August's total of 51,114. Okay, this figure is the highest since April of 2009, when 132,590 layoffs were announced. Okay, so again, good news, bad news. Good friend of mine sent me an email. I just wanted to read this to you directly. It's kind of weird. Okay, but work with me here, okay? Shout out to Mike Hinman. All right, the S&P 500. Now, this is based on Monday's close. Okay, Monday. It is today, Wednesday. Okay, so I'm 1 day late with this, but it still makes for some interesting reading. Okay, the S&P 500 closed at 1099.23. The exact same price it closed at back in 2008 on the exact same day, October the 3rd. Excuse me. If you remember back to 08, the market proceeded to do a free fall for 5 months thereafter and plunged another 18% before year end. Okay, as you can imagine, this has many technical traders extremely nervous. Another crazy coincidence is credit default swaps for South Korea. We're at 228 basis points, okay, on Tuesday, okay? No, check that. That would have been a Monday. That's the exact same level that they were on October 3rd of 08. All right, and one more thing, and this is kind of odd, but I am a huge baseball fan, by the way. One more thing that seems a little crazy, the New York Yankees actually lost to the Detroit Tigers on October the 3rd of 08, just like they did last night, Sunday night. Not trying to get superstitious, but come on. Do you realize the S&P went from a 1099.23 on October 3rd of 08 down to the devilish low, thanks Mike, of 666, and then rallied all the way back to 1371, only to end up right back where we started. That's an example of how ruthlessly efficient Mr. Market is, okay? Yeah, this is Comiskey's Corner fodder. By the way, I got an email from a gentleman asking how to get on the Comiskey's Corner. What I'm doing is basically, you know, this is my MF thing, okay, so I can't like cuss and do things like that, you know what I mean? But the Comiskey Corner is an alternate week from when I do this. But sometimes I will post special reports. But what you do is just go on YouTube, type in my name, Jim Comiskey. Okay, you'll get a drop down. Just click on my name alone. The word filter is highlighted in blue on the upper left-hand part of the screen. Left click that, okay, and then go down to posted this week, and then it all comes down chronologically. Okay, so you can follow me there if you so desire. And I appreciate the fact that a lot of you do follow me. Good stuff. Okay, some comments here I want to read from yesterday's rant. Okay, a little off topic, but what is the media blackout on Ron Paul? You know what? I'm trying to stay, you know, above the politics here with this whole Republican debate. You know which way I lean. The guys that have been following me, women have been following me. Ron Paul is like the smartest guy on the stage, but the media hates him. I don't know why. Maybe it's, you know, there's some kind of bias here because of his looks or his age. I don't know. But the man is, in my humble opinion, brilliant, for the most part. Some things he says are a little bit extreme, but again, my humble opinion, he's the smartest man on the stage. I'm also kind of liking Herman Cain. By the way, if you look at Herman Cain's background, he actually has a degree in, wait for it, rocket science. He worked for the Navy, programming missiles. Trajectory, you know, coming up with the trajectories on missiles, or he developed some software. Google him. The man's brilliant, truly brilliant. Let's go to another comment here. I'm not sure how much time we got, bud. Cool. Jim, well, by the way, that was Quicksilver Oxygen that asked about Ron Paul. The Christos 68. Jim, do you have any comments or insights on platinum? Where's it going from here? Okay, a couple things about platinum, and one of the reasons that I very rarely mention it. It is very thinly traded, volume and open interest are light. Okay, the Russians and the South Africans pretty much control the world supply of platinum. A lot of times what they'll do is they'll withhold supply for months and months and months. Okay, and what's the price going to do? Okay, then they unload you know, tons onto the world market, and what's the price going to do? So it's I don't know, it's a very difficult trade in the metals complex. Having said that, I looked at a chart before coming over here. Platinum, like the rest of the precious metals markets now, are truly oversold. Okay, and I think it's inevitable we're going to see bounces in the metals here. Okay, but if you're going to take my rec and you're trading futures, please use real tight stops. If you're stacking physical, a gentleman left a really good comment here. This segues kind of nicely. Chocobo Asylum. Once the markets tank, everything will probably go down with it in terms of stocks and the PMs and the precious metals. But the difference between stocks and holding physical metals is that you can hold on to your metals and sell them when the market recovers. Hats off. Okay, brilliant comment, truly. I agree with it 100%. That's pretty much all I got, guys, okay? I'm sorry, I'm reading some more comments. That's pretty much all I got. If you'd like to email me, please feel free to do so. My email address is just the letter J, COMISKEY at mfglobal.com, or give me a call at the desk by number 888-800-5373. Look forward to hearing from you guys. Please, always remember trading commodities is inherently risky and not suitable for all investors. Thanks.